Tesla stock closed today up 7.6%, up another 0.6% in after hours. You're sitting right at a very important level. That 250 level from a more medium term perspective is important. This is where you topped out. Well, if you draw the trend line, where you topped out in July of 2023, it looks like you topped out a bit right here in July of 2024. You topped out in September, October of 2024. You found a lot of resistance here in late October, early November. And then after the election, you broke through 250 to the upside and it was off to the races. Okay, so 250 from a psychological perspective is important, and from a technical perspective. And I actually think the stock could bounce further from here. Here in this video, I will discuss what we have in store for tomorrow. Tomorrow is going to be important in pre-market with earnings, as well as the economic data. But I do have to be honest with you. I don't think this is the ultimate bottom for Tesla, or at least not for the broader markets. What happens to Tesla is going to be highly volatile. The stock has already priced in a lot of bad news. Maybe that, 220 level was the bottom. But if the markets unfold the way that I think they will, it probably won't be. And I just want to give you a little bit of heads up before everyone goes and FOMOs back into Tesla. Because yes, again, I think the stock can rally further from here. I would not be shocked at all if the stock is $280 or so by the end of this week. I mean, you could see an aggressive rally here if things go right in markets. But I'm seeing some not so great signs of what the next couple of months could look like. So first and foremost, the reason why Tesla bounced today and the markets bounced as well today, it was a very unimpressive bounce, let me just say that, for falling as much as we did recently. And I mean, this is the fastest 10% correction you've ever seen over the past 75 years, and you only bounced a half of 1% today. Now, technically, from the low of the day yesterday, our 10% correction low, you bounced about 1.25%, but very lackluster in kind of that context. Now, Tesla fell over 50%, so not a big shocker. You're seeing a much bigger bounce. You also had Trump that bought a Tesla, Sean Hannity that bought a Tesla, and there's some growing optimism that maybe conservatives may, be starting to look into buying a Tesla. There's also some encouraging Google Trends data that shows buy a Tesla that is going parabolic. You have people like Zero Hedge sharing this on X. Here you can see that post. Zero Hedge shares search terms for buy a Tesla, buy a Rivian, buy a Lucid, buy a Mercedes, buy a Porsche. Tesla's search trend activity is absolutely exploding. And yes, this is very loose data. We look at Google Trends all the time. It does have some correlation to sales, but it's not the entire, trading thesis, if you will. But it does look good. So for those reasons, Tesla bounced today. Elon Musk also shared an old video of Jeff Bezos talking about the dot-com bubble when Amazon went from $100 down to $6, but the company was improving, suggesting that the same thing has happened with Tesla, that the stock has been cut in half, but the company is actually getting better under the surface. And I think that's what also caused a lot of the bounce today. But there are some very weird distortions out there, like CPI came in lower than expected, but Treasury yields actually went higher, which does not make a whole lot of sense. Stocks went higher, that makes sense, but volume today on the bounce was lower, 25-30% lower than some of the days we've seen recently as far as total volume. You only had 68 million shares that traded hands today on the SPY. Yesterday you had 88 million. The day before that you had 99 million. So kind of a lackluster day as far as volume. To really mark a bottom, you would want to see a volume surge, right? And that did not happen. Not the same way as it happened like August 5th or even back here on April 19th when you did get a volume spike that just did not happen today. But not as all bad. You did see the MTUM, the momentum ETF, was up about 1.5% today. The XLP consumer staple ETF was down about 2.1%. So people are rotating back into growth. They're rotating back into momentum. Short term, I think that is a positive sign. But where I'm more concerned is really over the next couple of months, not the next couple of days. And this is something I shared on X. Bank of Canada's Governor McCallum, I don't know if I'm saying that right, said, quote, "I am not ruling out an unscheduled rate move if something severe happens suddenly." He's essentially saying the Bank of Canada is prepared to do an emergency rate cut if something unforeseen happens. That is not commentary that you hear all the time. And what raises alarm bells for me when I hear that is the correlation that historically is with the Canadian economy and the US economy. So the green dots here are the unemployment rate for people 15 years and older in Canada. It's consistently higher than the US. It's pretty much always been that way, at least in recent times. But you've never really had an instance where the two diverged. They really follow each other. Just Canada's a little bit more amplified. And to some extent, Canada's, unemployment rate can rise a little bit faster than the US or fall a little bit slower for that instance. Well, Canada's unemployment rate has been rising really ever since 2023. It's been kind of slow and steadily going higher. The most recent report came in at 6.9% unemployment, 6.7% unemployment, around that area. Now, the U.S. unemployment rate has kind of stalled out a little bit. It's fallen a little bit, and now it's starting to rise up again. In the latest BLS report, the unemployment rate went to 4.1%. Previously, it was at 4%. I believe the highest we were at was, 4.3% or so? 4.2% technically. So it's alarming seeing things go this way. And it's predicted that Canada will enter a recession this year. Where I see the risk is nobody's really expecting a U.S. recession. That's really not in the cards right now. And I hear a lot of people, hedge fund, Wall Street guys that say, I don't see a recession. That's right. Me either. I don't see a recession at this very moment. But the reason stocks have been selling off is what about 2, 3, 4, 5, 6 months from now? What are the policies today doing to economic activity in the future? And that's where it's really hard to deny things are going to get worse before they get better. I mean, besides the fact Trump, the press secretary, Scott Bessent, basically everyone in the Trump administration has already told you prepare for a recession, or quote unquote, as they call it, detox or transition period. Like they're telling you we're going into a recession. And I think they want us to go into some kind of shallow recession to drop interest rates, to kill inflation, to get back to an economy that is, again, fueled growth from the private sector instead of the public sector. So I think that's the ultimate goal by the administration. Are they able to do that? That's the question. Do they have the power to push us into a recession? Well, the last time you had a tariff regime like this, you had a depression. So I don't think a recession is too far-fetched. And it was the Smoot-Hawley Act, the Tariff Act of 1930, that helped exacerbate the effects of the Depression. You probably would have only had a recession if not for that Tariff Act in 1930, which was repealed in 1932. By then, it was far too late. Do I think we're going to have a depression? No. Do I think we could have a recession? Yes. And stocks are not priced for that. They're just not. We're not, pricing stocks for that, and stocks are not priced for that. Now, a model from JP Morgan shows that the market implied probability of an economic downturn has climbed to 31% on Tuesday from 17% at the end of November. Yeah, that's not great. Goldman Sachs says that they have a similar model that also suggests the recession risk is edging up, now at 23% from 14% in January. And part of the problem is with, markets down 10% right now, is normally you don't bottom until everyone's bearish. Everyone is not bearish right now. Like, far from it. People are really fighting what the administration is trying to do, and that is push us into a recession. People are fighting that and, really prolonging the whole process of people turning bearish. If everyone was bearish right now, you would probably have a much stronger bounce from the lows. We did not get that today. Pretty, good indication that the lows are not in. Now, what I also find very fascinating, this is the flows per month for the QQQ in millions of dollars, okay? This goes back to January of 2022, okay? What do you notice? All these months are positive. Even when the NASDAQ was down 30% in 2022, there was only 1 month that was negative, and it was only negative $9.5 million. And that was in April of 2022. Okay? Every other month since then has been positive. Besides February 25th through March 25th. You had net outflows of $418 million. At least that's what's estimated so far. We're obviously not to March 25th. So the month-to-date totals, the last 30 days, have actually seen the first outflows really in a long time. And again, back to the unemployment rates between the U.S. and Canada, we basically went into or out of recessions at the same time. I think it's kind of ignorant to say Canada's going to have this recession and we're not going to. I think it's very easy to actually predict this in this instance. When you look at Doge, really destroying employment confidence in 2 million government employees, let alone Doge that's cutting back government spending, that's creating employment concerns with all this, companies that do business with the government. So the government has 2 million employees. There may be 5 to 10 million government employees that are seeing contracts get reduced or outright canceled that may be nervous for their jobs. Okay. I think that will start to be reflected more. And that's why we're seeing consumers slowing down right now. Okay. I think it's kind of ignorant to say that, mixed with obviously the trade war creating more uncertainties, and what just dollar amount what the trade war is going to do. With volatility in government policies, people are not investing right now. IBM CEO said yesterday that the tariff uncertainty is really making people pause their investments. Pausing investments is not good. And I'm sure that's going to lead to layoffs, and especially layoffs through attrition, right? When people quit their job or leave their job, it's going to be a lot harder to find a new job, but those companies are not going to rehire to fill that position nearly as fast. That is what layoffs through attrition means. So, when I look at these two economies, the U.S. and Canada, and I think about the dynamics that are happening in the U.S., I think it's going to be very difficult to avoid a recession. I don't think Trump's going to back down anytime soon. If that happens, great. Then that obviously lowers the recession risk. You can also see something I talked about in the last video. This is trueflation. Now, what is inflation at its core principle? Okay, you could say it's money printing. You could say it's XYZ, but it's really demand. Okay, if there is demand for a product, you can have inflation. If demand slows down for a product, you cannot have inflation. Simple as that. Why? Because the economy does not work if people do not buy things. Okay, so imagine it like this. Imagine if I'm selling, water for an example, and I'm charging $5 a water, and my break even in the factory is I have to sell 10 water bottles a month to just break even, okay? Well, if I'm charging $5 and I'm selling 8 water bottles or 7 water bottles, I'm not breaking even. I have to lower prices. I have to bring that water bottle down to, let's say, $3. And then I'm selling 12 water bottles a month. Great. Maybe I have some room to raise prices. But if demand does not keep up with where prices are, if demand starts to fall, companies lower prices so they can break even and make a profit. Because if you obviously cannot run your factory at full capacity, 9 times out of 10, your business will not be profitable from a manufacturing or producing, side of things. So at its basic principle, inflation is a product of demand. It's obviously a product of other things as well. But if there's not demand at a price point, prices will come down. Because if people are just simply not buying, then you're not selling. And in that case, the economy halts to essentially a stop, right? So the drop in trueflation, yes, has a lot to do with energy. It has to do with other things as well. But the trueflation index absolutely cratered from 2.33% down to 1.32%. This is updated daily on millions of products that are included in the BLS inflation report. Okay, so that's why this tends to be a leading indicator, because it's updated so frequently. It essentially follows, to the most part, the path of inflation. This is telling you that the economy is slowing down. Okay, kind of like China's in deflation. Look at China's GDP. Maybe it's on a different chart. Look at China's GDP compared to, other developed nations like the US here in green. Look at China. It's done nothing, essentially, since 2021. 2021, China's GDP was 17.82 trillion. Today, it's 17.79 trillion. 2 years, 3 years, 4 years later. And this is only updated from 2023, right? So it's going to be a little bit higher. It's going to look a little different. But essentially, China experienced deflation and essentially no growth in the economy. China's really what seems like been in a recession. Or look at something like this. In February 2025, France's inflation dropped to 0.9% year over year, the lowest level in 4 years, due to a sharp fall in energy prices and a slowdown in service, manufactured goods, and tobacco prices. But I seen a headline today. France's GDP for Q1 is almost negative. It's expected to be between 0.1% and 0.2% positive. Like, not good at all. Flirting with a recession. The bottom line principle of this is if we do see inflation plummet over the next month or two, the economy is going to look like it's plummeting as well. Recession fears are going to grow, and you are going to see stocks continue to be under pressure. And again, I think there's a lot of bulls still out there. People really don't want to believe that this is the start of what could be a recessionary dynamic. You can see the VIX as of recently. Well, today it fell, okay? It was down about 10%, which is not really encouraging if you're thinking this is the start of a new larger rally. Normally, you want to see the VIX like absolutely implode, right? It usually goes straight up and it goes straight down. People get fearful really fast and then they all get bullish at the same time. That didn't really happen today. The VIX is still overall pretty elevated at 24.23. But what's interesting about this is even though the VIX is elevated, positioning is not nearly as bearish as the VIX suggests, okay? And normally it's when, people are bearish, like the AI investor sentiment survey shows people are bearish right now, that's for sure. But their money is not necessarily positioned in a ton of shorts. They're not super bearish on the broader markets. They're still overweight equities a little bit. So from that perspective, we have not seen the sentiment, the actual positioning get bearish enough to call this a bottom, in my personal opinion. Again, I could be wrong about all of this. Maybe for whatever reason, the U.S. economy just bucks the trend and it does something it's never done before. Maybe that's possible, okay? I think it's improbable. And I don't think we're priced for that, even though we've fallen 10% from highs. But again, I do think markets could rally further from here. Like, could you get back to your 200-day moving average on the SPY? Probably quite easily. That's at about 570. SPY today is at 558. That would be a bounce from here of another 2% or so. That would put the bottom to top bounce on the SPY of about 3.3%. I would not be shocked if that happens. You should have probably gotten a bounce a lot sooner than we did. We've just had really bad news flows. But I think when it comes down again, you break a new low. And that's your potential position or opportunity to hedge portfolios, is after the bounce when you start to come down again. I'm not a financial advisor. I'm not a financial planner. That's just how I will be looking to trade this market. This is not the rally back to new all-time highs kind of situation, unless Trump were to cancel the trade war. If that happens, there's a good chance we could avoid a recession. There's a good chance confidence comes back, investment picks up, and all is fine. The odds of that, though, I think are very low. I think they're less than 10% that Trump all of a sudden backs down from tariffs, at least anytime soon. And that's ultimately by design. I think they, again, want to push us into a recession. And again, for Tesla's sake, you probably do bounce back to the 280s or so. Like, I would not be shocked if that happens, even as high as 300. People have been pretty aggressive to the downside. I expect people are going to be pretty aggressive to the upside as well. Just a couple good news headlines in this market can send you skyrocketing. Now, a couple bad sets of data or bad headlines could also do the opposite. So keep that in mind. PPI tomorrow is gonna be coming out at 8:30 in the morning. I think PPI is gonna be important. This is the producer price index. This is the company side of things, right? So if company costs go up, they tend to pass that on to consumers. Okay. We'll see what it has to say, but we are expecting another good reading tomorrow, or I guess an improvement on your headline PPI from 0.4% last month down to 0.3%. Core PPI month over month expected to remain at 0.3%. So nothing too crazy expected there, and we'll see if it moves the markets. Initial jobless claims are expected at 225,000, down from last month's 221,000 number. So you are expecting a little bit of a rise with initial jobless claims. I don't think this is a big deal unless you get a big move. Like if this thing skyrockets, yeah, you have a big problem. If this thing falls, that could help fuel some of this bounce. And again, honestly, I have no idea what that number is going to look like. It could go either way. Now, on Friday, we have the Michigan Consumer Sentiment Survey that will be coming out. This is a pretty political survey, so I take it with a grain of salt, but Wall Street pays attention to it a lot. Current conditions, inflation expectations for the 1 year and 5 year ahead period, overall consumer sentiment, consumer expectations, like all of these numbers are important. They've all been falling now for the last couple of months, and if they continue to fall, well, that's a bad sign. Inflation expectations continue to rise. That's a bad sign from the market's perspective, although I don't put, again, too much weight on that. Wall Street certainly does. So I just wanted to share, some of my perspective on this market right now. Could I be wrong? Of course. Could markets, rally back to new all-time highs? I think it's highly improbable, but it's possible. And I think, unfortunately, the downside is so much larger than the potential upside that even buying this 10% correction in the face of what we're dealing with doesn't make a whole lot of sense for a lot of people. Now, I am selectively buying. I've been buying Tesla, a couple shares a week. I think this is going to be a prolonged period of downside, whether we go into recession or close to a recession. it's not going to be a V-shaped recovery like we've seen before. It's going to be more like 2022. You go down a bit, you bounce a bit, you fall again, bear market rally, you fall again, right? And then you'll ultimately bottom when policymakers pivot and we have a little bit of clarity on the economy. You know, if we go into a recession, is it a deep one or is it a shallow one? You know, as long as it's a shallow one, you probably bottom when we are in the recession, right? That last crash as the recession starts, right? That's probably the bottom. If it's a bad recession, which I don't think it will be, then you'd obviously be talking about more downside. But I mean, theoretically, just to get back to 2022 lows, if we had a recession, could be possible. That's another 40% downside from here. You know, what's the upside? 10%? Like new all-time highs? Like that's probably the extent of what I could see from a reasonable perspective, with the government doing what they're doing, with the Fed on pause, with inflation still being a problem. It's kind of a stretch if you think we're going to be higher than that, okay, without anything else changing from this point. You need to get a change. And unless you get a change, I don't like the upside setup versus the downside setup. Much more downside versus upside. If the theoretical downside is 40%, no way in hell the theoretical upside is 40%. Unless, I mean, we find there's diamonds under everyone's house or something crazy. Like, you're not going to get 40% upside without something dramatically getting better. Okay? I don't even know what theoretically that could be. That would be the SPY at about 780. I just don't like the risk reward. And I will be shorting this market on bounces. When we bounce and get close to that 200-day moving average, which I think we will, I will be shorting the markets again. But again, it's not all too often you get Tesla down 50%. And the good news with Tesla, I think you've priced in a lot of that bad news. Now, of course, we get back to 280 or 300. The stock's going to fall again. But if we do that bouncing, chopping around, you may have already priced in a lot of the bad news. And sure, could the stock go lower if we do go into a recession? Of course. But how much lower? It's a hard call. The longer term, downtrending line, right, which we actually broke into an uptrend with the election rally. We talked about this, and that's why I thought we were going to have a very large rally in Tesla. That trend line is actually down here at about 180, 190. Depending when we hit it, like by April, it's really going to be at about 180, but right now it's at about 190 or so. Trend line's going to trend down over time. That would be probably the ultimate low. You could fall further again if you had a recession, but in case I'm wrong, I do like the risk reward profile of Tesla, right? Could we fall another $100 in Tesla? Sure. Could we go up $500 by the end of this year if I'm wrong and things go back to normal and we're all bullish again? Yes. You could rally $500 to the upside here. You could fall $100, maybe $150 to the downside from here. Now, we do have some important earnings as well tomorrow. We do have Dollar General tomorrow pre-market. That's more lower middle income consumer. We already know they're kind of bad, so I think the stocks reflected that. Could you see a little bit of optimism there if they have good numbers? Perhaps. Thursday, tomorrow and after hours, you have DocuSign and Ulta, Semtech. If Ulta guides down and has something cautious to say, they're going to be just one of the next retailers among pretty much all of the other ones to have negative things to say about the consumer. That's not going to be great for broader markets. So, with that said, ladies and gentlemen, that is what you need to know about tomorrow and what we have in store. But again, how I'm kind of looking at our markets right now and what my plans are going ahead. So you guys have a great rest of your day. Let me know your thoughts down below in the comment section. Are you bullish? Are you bearish? Are you hedging on bounces? Let me know what you are doing down below. Have a fantastic rest of your day, and I will see you in the next one.